Remember, he is the first one to call for 7 rate hikes this year back in January. Now he thinks 2 half-point hikes in June and July, followed by quarter-point hikes at the rest of the meetings, and a terminal Fed funds rate now of 3 to 3.25% by May of 2023. Ethan, it's great to have you. One nuance to point out here, you're a meeting later than others on these half-point hikes. Why is that?
Yeah. Well, I wouldn't dispute the idea of the Fed going 50 in the May meeting. I think it's certainly quite possible. Our argument is that they're doing 2 things at that meeting. They're likely to hike 25, and they'll also announce quantitative tightening. And we think it's going to be a pretty aggressive tightening program that they're announcing. So we think the 2 together are equivalent to doing a 50 basis point hike. And then we have the Fed going 50 at each of the next 2 meetings. So it's a pretty subtle difference, and I wouldn't quibble with other people's forecasts.
We spoke last time on this program when you said the Fed could actually be a little back-end loaded. Now they're looking more front-end loaded, or at least that's what a lot of economists are thinking. What's changed?
Their rhetoric. I mean, this has been an amazing pivot from the Fed. I mean, they were very far behind the curve, and they've done a series of pivots. The last one was to acknowledge that they could go 50. If you look at the Fed just a month and a half ago, they were basically saying, no way we're doing 50 at the March meeting. They only did 25. They seem to be signaling that they needed more evidence to do a 50 basis point hike. And then Powell comes out and says, no, we can easily do 50. And other members of the committee say we can easily do 50. Well, if they say they could do it, I think they will do it because they're behind the curve and they need to get moving. And the only thing stopping them up to now was their own rhetoric.
Where do these kinds of rate hikes, Ethan, take inflation by, say, the end of the year? And what kind of effect do you think those rate hikes will have, A, on the bond market, and B, on stocks?
Well, I am amazed. You had an earlier guest on there asked about they're surprised about the strength of the stock market. I am surprised at the strength of the stock market. I would think that with the market now pricing in more than 200 basis points of Fed hikes this year. 6 months ago was basically none, and you've gone 200 basis points, and the equity market in the last 6 months is basically flat. It's a pretty remarkable outcome. I think the only way to explain the ability, this kind of Teflon-coated market, is that the Fed hasn't gone all the way here. They're still saying the economy can handle it. We're not trying to hurt the economy. We're just trying to go back to neutral. They haven't taken the big step, which is to say, you know what? We have to hurt the economy. We have an inflation problem that will not be contained without actually slowing the economy down deliberately, and we can't just count on supply chains to rescue us. So, we think that by year end, there'll be enough of a drop in inflation that the Fed can slow down. But, our forecast for 3.25 is the peak rate. That's a conservative forecast. The Fed could definitely go beyond that.